E-commerce company Shopify reported quarterly financial results on November 12, 2024, that is sending the stock price higher by more than 20% following the news. I'll review those quarterly financial numbers and highlight why the stock price is soaring, and I'll also update my buy recommendation for Shopify stock and let you know if I think the stock is a buy, hold, or a sell at current valuations. So let's jump right into it. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Shopify told investors that they achieved 26% revenue growth and 19% free cash flow margin this quarter, making their sixth consecutive quarter of greater than 25% revenue growth, excluding the logistics business. And if I zoom out a little bit and talk a little more about that logistics business, remember a few years ago, Shopify made an ill-advised acquisition, several billion-dollar investment in the logistics business, fulfillment and logistics. They not only made the acquisition of a couple of $1 billion of the company Deliverer, with two R's at the end, they also invested a couple of $1 billion in their own expansion of their own fulfillment and logistics networks. Overall, that several billion-dollar investment turned out to be ill-advised, and they've been trying to divest away from that category in recent quarters. That's been working well, the divestiture. The initial investment was not working well, and I highlighted that when the company made that announcement. I thought it wasn't a prudent decision. I thought this wasn't an area they should be trying to compete in. They had an asset-light business model that was working extremely well. And one of the reasons why a lot of investors liked Shopify stock was because they had that asset-light business model in stark contrast to Amazon, which is a very capital-intensive business model for e-commerce. So if investors wanted that capital-intensive type of business model investment, they could have invested in Amazon stock. But the reason why a lot of investors chose Shopify is because they wanted exposure to the e-commerce industry without those heavy capital investments that's required from a company like Amazon. Now, Amazon has demonstrated excellence in fulfillment and logistics, and that was one of the reasons why I said this might not be a smart thing to try and compete with Amazon in that category that's very capital intensive, right? Hundreds of billions of dollars Amazon has invested, and you're going up against that giant in that category that's not really going to provide very good profit margins in the long run. And so there was great debate among investors about that. That caused Shopify's stock price to fall considerably during those moments following those investments. But now you can see Shopify is recovering from that, returning to its asset-light business model, and it's working really well again. In the 3 months that ended September 30th, 2024, the gross merchandise value transacted on the platform increased to $69.7 billion. That was up from $56.2 billion in the same quarter last year. This is the total amount of transaction value on the Shopify platform. And this is the core factor that drives Shopify's business forward. This is where Shopify brings in buyers to the companies that are offering Shopify products through Shopify websites. In fact, if you have visited my website, parkevtatevosyan.com, it's on the Shopify platform, and it's easy to use for folks like myself that are not too savvy with website development and app development and selling products online. It really makes it user-friendly for the novice, for the person that's just learning these products. So it helps facilitate businesses from startup to growth phase, and you can go throughout the growth cycle with Shopify, whether you're a startup or whether you're a bigger business. You can have that journey on Shopify. They have different tiers to take your business to different levels as you grow. Revenues, which the company generates from fees and percentage transactions increased to $2.162 billion, up from $1.7 billion in the same quarter last year. And then perhaps more impressively, free cash flow increased by roughly $150 million, up to $421 million in the most recently completed quarter. And the revenue growth rate accelerated ever so slightly, up to 26% year-over-year growth compared to 25% year-over-year growth in the same quarter last year. And if you've been following my videos, you'll know that I love companies that demonstrate second derivative growth, and that's what Shopify demonstrated here, an increase in the rate of growth. 25% growth is already really good, and if you're increasing that rate of growth further, that's really impressive. Looking ahead, Shopify is forecasting revenue growth to continue at these higher levels. Revenue to grow at a mid to high 20s% rate on a year-over-year growth basis. And that sounds like it's going to be better than the third quarter. So mid to high 20s, that would be something like 25, 26, 27, 28% revenue growth expected in the next quarter. If they had just said high 20s% without including mid, that would have been 27, 28, or 29% growth expected. But they're including mid, so that means it could be 25 or 26 as well. So somewhere up there around 25% growth, which is what they delivered in the previous quarter, 26%. And that's great news because that level of growth has facilitated increases in free cash flow and improvements in profitability. However, in a bit of a disappointment, they forecast the free cash flow margin to be similar to the fourth quarter of 2023. And that was a bit lower than the previous quarter here they just reported. Let me share with you again here. The free cash flow margin in the previous quarter came in at 19%, which was an improvement from the previous year where it was 16%. But here for the fourth quarter of 2024, they're forecasting a similar growth rate to the fourth quarter of 2023. So they're not forecasting that kind of improvement that they delivered here in the third quarter in year-over-year increase in free cash flow margin. I highlighted the company has used the increase in revenue to improve profitability. In fact, operating income more than doubled to $283 million, up from $122 million in the same quarter last year. And a similar story, we already talked about cash flow from operations, jumping in the most recent quarter to $423 million, up from $278 million. So overall, very good results here from Shopify in the most recently completed quarter. Revenue accelerating, operating income jumping, more than doubling, and cash flow from operations increasing as the e-commerce industry accelerates and returns to more normalized spending patterns from consumers. Shopify stock jumped following these results from around $80 per share all the way up to $112 per share as of this recording. Shopify is now trading at a forward price to earnings of close to 82, 81.5. And in my opinion, this is a little too expensive for Shopify stock given its prospects, given its growth expectations over the next 5 years. And so for that reason, I will update, and I have updated my recommendation for Shopify stock. I've had it rated as a hold all year long in 2024, and I updated that today, reiterating that I still think the stock is a hold. It's an excellent business now, growing in all the right areas, divesting away from that logistics failure, and it's now getting its groove back, but it's still too expensive given its prospects. And it's an excellent business, don't get me wrong. It's just the price is more than incorporating all of those excellent prospects right now. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.